Welcome to TheoTRADE. This is Don Kaufman. It's December 20th, 2024. Just about an hour to go to the cash close here on this Friday afternoon. The S&P's up a staggering 85 handles. Volatility is breaking out everywhere. A lot to discuss, of course, on this TheoTRADE weekend update. The Fed who stole Christmas. Well, I'll explain that and much more here. Let's get right into it. So the S&Ps right now are rebounding to some extent. And if I sound a little bit, evasive on that one, well, it's because I am recording this with 50 minutes to go to the cash close. And yeah, it's definitely edgy. Clearly, some of the news cycle today regarding the possibility of a government shutdown has been really kind of instrumental in some of the price action we're seeing, but it also had a lot to do with the PCE data. All right, so let's kind of review where we are right now, and then really very forward-looking statements, of course, in this weekend update. Okay, so price action this morning, and it's almost hard to say this, laughable, if you will. Price action this morning, we were trading down at, that's right, people, 58.66. Right now, trading a 60.18. So, what's 150 S&P points amongst friends? Obviously, right now, we're off some of the session highs, which has been all the way to 60.50. I mean, net, you're seeing at one point from low to almost absolute high. And again, it's not over just yet. You're seeing almost a 200-point S&P range. Now, that's kind of when, you want to step back a little bit, maybe sit on your hands. But again, I feel edgy coming in to this weekend, and in no uncertain terms, I want to make this clear right off the bat. I don't think that volatility is just going to subside and go quietly off into the night. And I want to be clear about that right now. Again, I do not think that volatility goes, off quietly. Like, there's big structural issues right now with the marketplace. So let's start to work our way down my list over here. Let's start with the Festivus Feats of Strength. If you have no idea what Festivus is, well, wake up. Here we are, Feats of Strength, which is the bounce back in this marketplace. Well, to really look at this, you got to cruise over to the SPX. Okay, and the reason I'm going to the SPX, I want you to see how really dramatic some of these moves have actually been. The week started out with roughly nothing on Monday, nothing on Tuesday. Even Wednesday started off relatively light. The Fed that, as I said, the Fed that stole Christmas, Fed comes out, the marketplace absolutely tanks, right? So we were unchanged on Wednesday morning. By Wednesday afternoon, we got crushed by, 180 plus S&P points. Thursday was actually quite nerve-wracking because at one point on Thursday, we had rallied back and then the rally failed. Coming in here to Friday, the market, it really started to adhere to some of the news, some of the headlines. And one of the things that actually helped the market was some of the PCE data indicating that inflation may have actually softened up just a little bit, and the market started to rally to some extent on there, but I don't want to get ahead of ourselves. The market started to rally a little bit on some of the PCE data that came out, and that was, and again, I'm going to zoom in right here at 8:30 Eastern time. But the truth be told, the market really took off to the upside much more when there's going to be a government shutdown. It's almost assured. Then it's not. The probability right now over in poly markets is sitting about close to 50-50. But again, there's an hour to go to the cash close, and the marketplace has to believe that the government's not going to shut down over here. Nevertheless, I just don't think that that's going to be a huge bearing though on market forces much past today's trading. So this is our Festivus Feats of Strength. We get a bounce back, but moreover, where we bounced back to is the single most important aspect over here. We had broken, and we're almost at one point this morning. We were basically 2.7 standard deviations, okay, outside. We ripped back, and what did we rip back to? Literally, this is, okay, the lower edge of the SPX expected move. I mean, we hit it spot on. That is, it's not just shocking, it's efficiency in the marketplace. By the way, with that, and I'll talk more about this in a moment, I did, in fact, hit the put butterfly. Not for like a crazy gain, just 233%, which, that sounds crazy, but last week we hit one for 810%. Nevertheless, the comeback in the SPX, again, I'm a little leery about it. It is what it is. So moving past that, the Fed, the PCE, and the bond markets, and I do want to talk about the bonds for just a moment. The bonds is one of the many reasons that, forward looking. Let's not look at the past over here. Look, the bonds sold off big, yada, yada, yada. Who cares, right? That happened. There's a little bit of a bounce back to the bonds right now, okay? However, the bonds are still basically scraping the very bottom of the barrel. And that is one of the reasons that you should be extraordinarily careful moving forward. So you can look, and we're going to talk about volatility here just momentarily. You can look at everything you want, right? The fact that the bonds are down here and interest rates associated are not really backing down that much. And I say the interest rates associated, the 10-year has backed off, and it's backed off to about 4.52%. Again, I just wanted to note that what I'm looking at over here, if you're looking for the symbol is TNX, okay, CGI, right? That's actually the symbol for it. So, and this is the 10-year, right? This thing rallies back up. It's clear up to about 4.6%. This is now 4.524% on a 10-year, which is still, okay, an incredibly high level at this moment. And we're only a hop, skip, and a jump away from some of the recent highs in there, which I think leaves the marketplace in a very, very vulnerable position. Specifically, I think it leaves tech in a very vulnerable position, which I'm also going to talk about in a moment because I am taking opportunities in some of the tech stocks. So the PCE data, although everybody's going, oh, that sparked the rally. As I said, I think that this rally was more sparked, and we were in oversold condition. Okay, there was a lot of news coming out, a lot of headlines regarding the possibility of government shutdown. We just caught fire and took off to the upside. And again, one of the reasons I say caught fire, took off to the upside, it's the efficiency of the trade that makes me really kind of like feel that way. Meaning that the efficiency of the trade, people, this is a short squeeze, this is that, full of crap. If it's a short squeeze, it will be squeezed right to the expected move, right? It's none of the above. Okay, it's just an efficiency trade. We were driven back to the expected move on what was a little bit of positive move that just kind of caught fire, took off to the upside over here. And yes, there's some short covering in there. Okay, meanwhile, this still looks pretty daunting, if you will, into the cash close. Now, with that, okay, the bond markets, again, they're not really recovering much. And as I said, that is going to leave this marketplace vulnerable. We'll come back to vulnerable in just a moment. The next aspect over here, the triple witching, okay, which is December expiration. Obviously, it's not disappointing, but we're not through it, all of it just yet. I mean, in this triple witching over here, we've come back dramatically, okay? However, as I was saying, there's some pockets in here that leave vulnerabilities open. One of them being like Microsoft, okay, Meta. All right, there's some key constituents that are missing from what is, this is a big rally. It's 1.4%. And there's key products missing. And the other aspect is what is rallying the most? Stuff like financials over here. Okay. That again is not, in terms of a sector, that's not a great sign that something that's had the living crap beaten out of it is what's rallying the most, because that is what like those bear market rallies, okay, are really about. It's stuff that's had the living crap beaten out of it that actually has the bounce. Take a look, okay? It's still kind of a meager bounce though inside of the energy sector. That one I'll give you. And then we see stuff like Broadcom, but Broadcom has, of course, been beaten up from 250 down to 2 18 before it actually saw any bounce over here. Meanwhile, you also have to point out Tesla faded. So look at big tech, okay, and tell me honestly, moving forward, okay, that these are positive signs for the market, that Meta is basically flat on the day, okay, that Tesla's flat on the day, that Microsoft's flat on the day, okay. I get it. We have a nice bid underneath us right now, okay, but we have problems, and they're big problems. And again, the triple witching, it doesn't disappoint, but the problems have not dissipated. And those problems being some of the volatility, obviously, that we saw on Wednesday, Thursday, and even into today. Just because we're bouncing right now doesn't necessarily mean that that's not volatility. Speaking of which, let's talk specifically about volatility. And I'll spend just a few moments on this because it's so critical. Okay. Instead of saying volatility crush, this is crushing volatility. The volatility, and again, most people like to look at like VIX, right? So the VIX spikes to 28, which is roughly, okay, about one standard deviation out. Like if you look at VIX and you were looking at VIX in terms of like standard deviations, I'm actually going to draw this on the screen. If you look at VIX, if the average was right around 20, okay, the upper edge of that one standard deviation move would just to be about 28. Ironically, we basically hit 28 and reverted back down to some degree. But it's not the VIX, okay, that really resonates with me. And I say this all the time, okay? It's also, after the volatility strikes, it's not VVIX. Like VVIX though is still in a pretty serious place. The volatility index is still sitting at the 110 level. Okay, VVIX though is only useful to indicate that volatility is serious initially. After the volatility strikes, which is the place that we're in, okay, the VVIX can actually dissipate once again. So the VVIX is less instrumental. When volatility strikes, I move away from VIX, I move away from VVIX, and I move almost exclusively to the volatility futures. And I often look at what's termed contango and backwardation. Okay, now those are ugly, hideous terms. Okay, this morning we were in a fairly wild backwardation. And what that means is that the January volatility was above the February volatility. That's just indicative of like risk is here, risk is now, risk is all over us. Okay, and then it subsides out in the future. The volatility, okay, coming into this close, it's a pretty like flat vol skew. Okay, but now we're trading like 1820, and that's in the Jan vol. Then we just jump very mildly, let's call it 18, okay, 70, and that's Feb vol. So we did drop back just a little bit. And by the way, this rodeo was not over. Got 40 minutes left of the rodeo here. This did drop back just a little bit. The aspect though that's really kind of shocking to me about it, I can't even believe we're even talking about a volatility inversion. Again, people call it backwardation, but like when volatility skew inverts, I can't even believe we're talking about it coming into the Christmas holiday, right? Christmas, New Year's is like 2 weeks. You're supposed to go yada, yada, yada. Nothing is going to happen. Let's just drink some eggnog, right? Festivus Feats of Strength. By the way, Festivus is officially on the 23rd of December. But, you're supposed to go into the holiday season. And I said this like several weekend updates ago. People are like already in the clubhouse thinking it's over. Evidently, that ain't the case. So we got to watch this very, very carefully because even though we dropped back to the contango, okay, it's downright funky right now. You're coming into a holiday and you're worried about like a volatility inversion. Everybody that's traded for a while remembers Christmas Eve of 2018, markets tanked hard. They rebounded after that, but that was because Powell panicked. Literally, Jerome Powell panicked in 2018. He went from a very hawkish view to a dovish view literally in 3 weeks because the market tanked so hard back in 2018. But it was a very similar circumstance. I'm not saying that we're going to tank, okay? But I'm also saying, as I said multiple times, and I made it clear, okay, if you're not uneasy about what the S&Ps have done today, okay, you're new because rallies like this, it's dangerous because we already kind of slipped a little bit off the edge of this expected move. It's another reason. All right. So the reason I call this crushing volatility is simply put, okay, don't just, go off into the night quietly, because this marketplace clearly is not. The fact that we're even discussing like the idea of volatility inversion, which is known as backwardation, okay, speaks volumes, okay, of the risk. Now, I'm going to be really forward looking on this one, okay? So clearly, even next week and the week after, I still anticipate, okay, some heavy vol, very heavy vol in the next even 2 weeks, okay? At this point, I think, again, you have to just discount the fact that it's even going to be a holiday. And again, I'm not trying to, okay, not trying to steal Christmas from anybody over here, but you're still going to have to be on your game because the marketplace evidently can move. But the other aspect that really resonates with me, as long as Powell doesn't come back in and change his mind like he did in 2018, which he's assuredly not going to do this time, okay, I don't think that the transition to the Trump administration is going to be smooth, not by any stretch of the imagination. It's not a political statement. And what I mean by it's not going to be smooth, it's going to be spending cuts. There is going to be some fighting. There is going to be some big, nasty, ugly headlines that are going to hit this marketplace. I keep reiterating just that. Look at just the infighting that has happened, okay, in the last few hours, okay, and recognize this, as I said, it's not going to be a quiet transition. It's not going to be that smooth. It's going to be some rough bumps on the road. I mean, can you guys imagine when Elon and Vivek start mentioning like $1 trillion plus cuts in tweets to the public? That's coming to a theater near you, if not in the next 2 weeks, probably in early January, when they start mentioning what's going to go on as that transition kind of takes place. So I think you need to understand and prepare for continued volatility throughout that. And that's why I said it's crushing volatility. Okay, so some positions that I am taking. First of all right, I want to start with like opportunities in here. If you're looking at the marketplace and you're saying to yourself, all right, I get it. I think there's going to be a little bit more volatility, fairly precipitous drop, okay, nice rebound, but you expect rebounds in the midst of volatility, right? That's, bear market rallies are the hallmarks of volatility. Opportunities. I actually want to start with Apple. If you believe that the marketplace is going to continue to sell off at all, okay, Apple looks actually promising. Why? Apple, if it closes right here, basically it's not its all-time high, but it's its closing all-time high. So Apple effectively closing in an all-time high, which basically imparts upon you it's completely unscathed. Look around, people. I mean, Amazon's basically 2 days removed, from its high. Most of your tech stocks are fairly unscathed. No question about it. Even Tesla, okay, Nvidia is above the critical threshold of 130, which I've been talking about extensively, okay. But Apple, for me, doesn't, because it's basically at its all-time high. And if more volatility comes, okay, I don't care what you think about Apple. I'm not here to tell you like, oh, Apple's fundamentals, this, that, the other. Okay, I don't care. Bottom line is this: if the market sells off, Apple comes with it. Why? It's one of the largest market caps out there. Like, there's no two ways about it. If they're going to hit it, they're going to hit them all. Want to know why? Look at the correlation. Look how high this correlation is, right? You have 90 products trading on one side of the marketplace. You should know that when you sell off, you're going to have 90 products trading on the other side of the marketplace, and Apple is going to be one of them. So look at Apple very carefully. It's an opportunity for a short position. And if you don't like shorting stock, you can use deep in the money puts as synthetic stock short replacement, synthetic short stock replacement. I'll get that one right. Feel free to reach out to me in the TheoTRADE room, and I will give you specifics of how to actually build that position. The short position, not just necessarily shorting stock, but a synthetic short using deep in the money puts. That can also be done, of course, in an IRA. I got another twist of fate for you here, okay? The bond market. Let's actually look at the bond market for a second. So the bond market is tanked, okay? Now, I said a moment ago, I don't necessarily think the bonds are done selling off. Okay. I do not think they're necessarily done selling off. But I will say this, I have definitely started to sell puts in the bond market. Why? I want to be long bonds. Okay. And I'm selling puts that are a decent amount out of the money. I'm selling like 105 puts. People, you got to go back. I mean, you got to open up a max chart. You got to come all the way back to a time frame like when was the last time the bonds were down at 105? Okay. It was all the way back in like, 2006, 2007. So, you're like 2 decades almost removed from the bonds trading 105. I'll buy them there. And so I started to actually build a position in the bond market. So we have Apple, it's possibility of a short. That's if you think the market's going to go back down. You have the bond market where, look, we might not necessarily be at the bottom, but it's time to start actually sniffing around and selling some puts because buying bonds at 105 would be sweet. Last position in here that I do want to mention right now is none other than silver. Okay, why am I going to mention silver? I think actually silver is quite the opportunity here. I'm going to start buying silver at 26. I'm going to start buying silver at 26. I've already begun doing this by selling a broad-based number of puts, and I'm already up pretty considerably on these because silver is actually bouncing today. But I'm going to continue to sell puts inside of silver for a long silver position. This is much more of an investment than it is a trade. Silver can get the crap kicked out of it and be back at 20. It goes down to 20. I'm going to be buying it with both hands. May have to hold it for a while, but I think it's opportunistic at this point. So if I'm looking for a long position in silver, long position in bonds, short position inside of Apple. As I was saying moments ago, in the SPX, okay, I hit the butterfly again today. In fact, I think it's kind of cool. I was bringing up my account statement earlier. Just the last 60 days. Just look at the last 60 days. Okay, you can see clear as day. Sold a butterfly for $3.45. Sold a butterfly for $3. Just the last 60 days. That's one win. That's two wins. Sold a butterfly for $5. Bought that thing for 55 cents. Sold it for $5. Today, I sold one for $2.05. All right, there's 1, 2, 3, 4 wins in the last 60 days of trade. You're like, it's not that much. You realize on a percentage basis, the worst of the butterflies was today, a mere 233% gain. Okay, it's winner, winner, chicken dinner. These butterflies have been paying off in a big way, and I'll be right back on the pony, even next week. Okay, holiday trade or not, I'll be right back on that pony in those SPX butterflies. Speaking of the SPX, well, take a look at this. We're going to close here in the next 30 minutes. Okay, the SPX rallies back, hits the expected move, spot on, literally reverses off of it. And as I said, like it's sketchy right now. It feels heavy into the close. We'll see what actually occurs into the close. I'm not like just outright like bearish. I'm not sure if the selling's coming back, today, or if the sellers are going to come back in there and wait till like, Monday, Tuesday next week. Okay, but believe me, we're not done yet with that volatility. Nevertheless, we're coming off of a week that we were expecting the $75 move. Tried for the corner and missed. I mean, we were way outside of that. It's like a 3 standard deviation move at one point. Okay. And we came all the way back, and now we're kind of fading a little bit. But here's the crazy thing. What are we expecting next week? Because as I was said, it's crushing volatility. So what are we expecting, though, next week? Again, there's 3.5 trading sessions. So Monday's a full day. Tuesday's actually a half trading session. Okay. Wednesday, we're closed for the Christmas holiday. You come into, obviously, Thursday, Friday are full days. People, I'm telling you, we're here, okay, throughout the course of next week. Yeah, we won't be here on Christmas. Well, we might be in front of computers. We're not broadcasting because the market's not open. But we will be here for that 3.5 trading sessions. But here's the crazy aspect of next week. Right now, we're still portraying a $100 move. So think about that, if you will. If you're sitting there and like, it's okay. They put away the volatility. They did not put away the volatility. The volatility is clearly, it's out of the box. Okay, it is out of the box. And with that volatility out of the box, just take a look right now. All right, here you go. 7 days left, 3.5 trading sessions, and we're up to almost $100 expected move. Okay, there's no earnings coming out. It's just pure volatility, people. And you better be in store for just that. All right, last thoughts here, of course, into the weekend we go. And by the way, this marketplace, that is not disappointing. Did I not just draw that on the screen just moments ago? S&P's starting to fade. 30 minutes to go to the cash close over here. And I told you, Like look at stuff like Microsoft. Does this look like a healthy marketplace? Be objective. Okay. Look at Tesla coming in hard and fast. Tech is going to get sold. And if tech is going to get sold, I'm telling you, you go after Apple. Why? It's high. Well, not necessarily anymore, but it's basically at highs. You got to sell right now. What is the strongest? You want to take a position over here. This is not about trying to find a stock that's going up, people. This is about trying to find, okay, basically what has been incredibly strong and knowing that if sell side activity is going to hit this marketplace, they're coming for you, Apple. All right, S&Ps starting to fade. Okay, remember, we traded a high here of 60.50. We're now trading over 50 handles off that high. Sellers coming in to today's close. Thanks everybody for joining us here at TheoTRADE. Back at it, of course, next week. Thanks everybody. Have a great weekend. Bye-bye.